Welcome to day 3 of our quick start training. Before we get started, I just want to do a quick mic check. Please type 1 in the questions box if you can hear the sound of my voice. All right, Jeff, thank you very much. I see a couple more of you in here. No talkers, huh? All right, that's quite all right. I'll assume everyone can hear my voice, so we'll go ahead and get started. So day 1, we went over the Pro9 core, how we can use that to identify the single T, continuation, and momentum trades. And yesterday, we covered the full Pro9Trader chart with the full suite of indicators on it and reviewed how we could identify more trade setups with that and also better identify and anticipate some of the trade setups that we're looking for. Today, I'm going to start these charts at the opening bell and walk through bar by bar and kind of discuss how we can get into some good habits of keeping a running tally of these rules so we can really try to be ahead of everyone else with our orders. All right, and you guys feel free to throw some questions at me if you guys have any. This day will be more interactive, so I'll be taking pot shots at your questions as they pop up. If I am in the middle of a trade setup, I will wait until that's finished before we get started with that, or before I get to your questions. So if I don't get to it right away, just be patient. I do see it. But we will get to your questions eventually. All right, so first, as always, I know I bring this up every time, but I feel it's a very important habit to build. Want to get in the habit of checking news. So this Harker Speaks could have some effects. Not really concerned. We're only concerned with our any of our news with a dot. So we have this Baker Hughes rig count at 1 p.m. So we wouldn't want to sit out 5 minutes before and 5 minutes after that news event. Other than that, looks like we're pretty clear. But it is a Friday. Sometimes Fridays can be slower than usual or a bit choppier. So something to keep in mind. That's not always the case, but I do like to pay a little extra attention to signs of a choppy market. And me personally, I may tend to be a bit more cautious on Fridays, especially since Monday was a holiday. And, if you go back over some of the holidays, there's usually a period of time, either before or after, could be a couple days, could be a week, where the markets start to pick up. So Fridays after a holiday. Trip, welcome to the class. Trip also brings up an excellent point. It is the American presidential inauguration this morning. So things like that, we kind of never know what kind of effect they'll have, but it may have, and it's likely to have some kind of effect. And people have been talking about how the markets are going to react when Donald Trump becomes president, even after the election. I don't know if you guys were watching after the U.S. election. The markets were absolutely crazy, probably the busiest and all over the place I've ever seen them. I think in the NQ, for the debrief that day, we did the NQ, and it took quite a few more extra hours because in the NQ there were 50 qualified trades during the day. A lot of them moved very quickly, so it's not likely we could have caught them all, but identifying 50 trades in one market is really, really out of the ordinary. Typically we see 8, maybe 10, 12 on a fast day. So, never discount how politics can affect the markets, especially events like that, presidential elections, inaugurations, things like that. Jeff asks, is the debrief based on recoil or the smart trading room results? We will begin releasing daily results for the recoil. We've been just moved into a new office again, just a couple doors down, but we're kind of juggling a lot of things right now, trying to get that out as quickly as possible. And I know Scott releases weekly results. I know they'll plan on having an area. Their Smart Money Room is getting a new website up, and it'll be all decked out with daily and weekly results just automatically posted every week. So on the Smart Money Room YouTube, you can check the weekly results, and you can always feel free to email them at support@smartmoneyroom.com and ask Scott, just I'm interested in the Smart Money Room. What are some of your recent results? Can I see some trades? Stuff like that. I'm sure he'd be happy to give you some information. So, all right. And then we'll also begin doing a debrief for core as well. So we can kind of see the contrast between the two markets and, the differences in profit potential between the two charts. All right, let's go ahead and jump right in. So I rewound all these markets back to, or just move them back to the opening bell. So kind of want to move this back a bit. So this is right before the opening bell. And I really like to focus on how can we catch trades right at the opening bell. I know some people do like to wait maybe 5 minutes after opening, and that may be better in some markets. I'm all for trying to grab a trade right at the open. Of course, they're not always going to go in our favor, but the same could be said about any trade. So the way I like to prepare is even just opening my charts 5, maybe 10 minutes before the markets, kind of scan and see what pre-market looks like, because I can still tell us the overall trend and what we should be looking out for. So if we look at this chart, the NQ, say we've opened it before market, all our EMAs are in the correct order for a long trade, nice and fanned out. We have a pretty good sized direction histogram as well as a super trend outside of its neutral zone. Not really seeing any signs of divergence. So here, I can run through, say I just want to double check and make sure. So I look at my continuation rules. My EMAs, they are in the correct order. My blue line is already above the histogram. That's 2 rules already qualified, not even into the market open yet. My super trend is far outside of its neutral zone. So in the case of a continuation long, I'd be needing to see a turn bar followed by another turn bar long. So what other trade could I be looking for? Well, we're already in the middle of a run. I could be poised to take a momentum trade. And so since my continuation is qualified, I know that my momentum is qualified because, or I should say, since 3 out of 4 of my rules for the continuation are qualified, I know that my momentum will be qualified because we use the same 2 rules. And the only other thing we're looking for is a momentum arrow. So after the market opens, we do get a tail here, see our momentum arrow pop up, and then as soon as we see this, we can go ahead and enter our green DPI price. So we can kind of be prepared for that. And even at this point, so this arrow may appear even before the market opens. So we can just be prepared with knowing what the DPI is. And we'll see that displayed on the right of the chart anyhow. But It's a good idea just to try to be a couple steps ahead so that if what we're looking for happens, we can enter our order very quickly. So we're not trying to scramble. We don't want this to be a stressful, scrambling type of strategy. Uh, I really enjoy trading this way because it's very uh, methodical, kind of slow and steady, wins the race. I mean, sometimes the markets are going to move very fast, of course, um, but building these habits when the market is a little bit slower can help you be prepared for catching those fast-moving trades. So even before we see that, sorry about that. So even before we see that next bar close, we know if we see a momentum arrow, say it hasn't appeared yet, our entry price is going to be 50.72.25. So I can have my dome up and just kind of be ready for what happens. So as soon as I see my arrow, I'm going to enter my green DPI price, and that order will be filled when the price hits that DPI. So even if I put my order in here and the market just reverses, and I see a turn bar instead, that contract's never filled. But if I see a turn bar, I know that if the next bar is a turn bar, so if I hit the next green DPI, I'll be set up for a continuation, right? Because my rules are still qualified. My blue line's still above the histogram, super trend's still far outside of its neutral zone. My EMAs are still in order. So even if I miss that entry, I may have a possible continuation entry. So you want to kind of get in this habit of, I don't want to say contingency plans, but what to do if the trade you're going for doesn't fill. What may be the next opportunity? Because it could happen very quickly after. But in this case, looks like our momentum trade would be filled. And again, we enter with our 3 contracts, a 15-tick stop. We're halfway to our profit target here. We're not going to adjust our stop from 15 ticks. I've heard some people mention adjusting it from 15 to 11. I personally don't like that. You may want to experiment with that, but I feel that I like to have that extra wiggle room because it's not super uncommon to see an 11 or 12 tick tail, or not that the tail would be 12 ticks, but for it to retrace 12 ticks, and if you had adjusted from 15 to 11, you would be stopped out on that tail. Now you could jump back in, but we did take an unnecessary loss. All right, Stephen, looks like you. All right, so a question. Can you take a screenshot of that and send it to support at Academy Day Trading? I'd like to see that. Because that definitely doesn't sound like it's functioning correctly, so want to make sure we can correct that if that is indeed a problem. Or if you can let me know the market and time, and then I can verify on my charts as well, and we can get that resolved. All right. All right, thank you very much, Stephen. All right, so we're halfway to our profit target here. Not going to adjust our stop from 15 ticks. And then in this next bar, now without referring back to a 30-second chart, since we aren't looking at it live, I know that this tail did not go far enough to stop me out. It went 12 ticks from my entry before it retraced, so it could come down to the tail, retrace, hit my profit target, and then continue moving. I could hit my profit target, adjust my runner to break even, and then it could drop down, stopping out my runner. So a few things could happen. But assuming my runner got stopped out, I still hit my profit target, and then I have another momentum entry. Because this one was qualified, we've continued trending long. My momentum arrow here, still qualified trade. Nothing changed much with these indicators. My blue line's still on the correct side. So I can just enter using this green DPI, 50.74.25. Again, halfway to my profit target, and hit the profit target somewhere in the middle of this bar, and adjust the stop on my runner to break even. And now at bar 11, since this is the fourth bar from my entry bar, 1, 2, 3, 4, we want to move our stop to the low of this bar, which will net our runner a tick. And that's the first time we start trailing our runner in the profit. And as each new bar plots, we'll just adjust to the low of the previous bar. And then once we are at the sixth bar from our entry bar, we can widen to the DPI, letting us ride over any wicks or tails that may happen on the rest of the run. And as each new bar plots, we'll widen to the new DPI, or adjust it to the new DPI, and that'll let us ride over this tail here. And then we get stopped out on this turn bar. So, and this is a perfect time to illustrate the difference between the trailing stop strategies. So some members do like to just continue trailing at the high of the previous, or the low of the previous bar in this case, until they get stopped out. Now, while that may initially secure you some more profit with that runner, we do have to keep in mind of these instances where if we were trailing at the low of the previous bar, this tail is likely to have stopped us out. Let's double check here. So the low of this bar is 50.77.5, which is where the stop on my runner would be. And then the low of this bar is exactly the same price. So it would have stopped us out. And then we have another momentum entry, and we don't know the next bar is going to be a turn bar. So eventually runs run out of steam, right? But we never really know when that's going to be. Now, we may have seen a possible divergence reversal setting up, but that's not always a strong clue that the next bar is going to be a turn bar. That's something we just cannot determine. So if we were trailing at the low of this bar, we get in on this momentum right before the turn bar, get stopped out, take a full stop. So while we did secure more profit initially, then we entered a trade and got stopped out. Unless we were just saying, once I got into this run, I'm going to ride it as far as it goes and not take any momentum trades. But then we run the risk of not entering a trade that can continue to run. So this is why I think, just my opinion, you may find one works better for you, but I like widening to the DPI because I just avoid that situation altogether. And then that way, if it does continue to run, I'm in there and I don't have to worry about it. I just keep moving my stop up every 4 ticks and wait till I hit a turn bar. So it's kind of one of those things you have to weigh of securing an initial profit or possibly giving up some of that profit initially for greater potential if the market continues to move. And we did have a divergence reversal short setup, and this is a good example because this is a bit of a rare case. Typically, you'll see the blue line cut through on the close of the turn bar. So in this case, it did that the bar before. So this rule, and if you were in class yesterday, you may remember I wrapped up these three rules into one. So because we want the price bars to be moving in the opposite direction of our blue line for at least 5 bars, no greater than 10. And we also need the blue line on the correct side of the histogram. So yesterday I said the way to wrap all these up is when the blue line crosses on the turn bar, this number needs to be between 5 and 10. Now if the blue line is already on the correct side and this number is still between 5 and 10, that rule also qualifies because we don't necessarily have to see it cross from one side to the other at the close of the turn bar. If it's already there, that rule is met. So, and this goes for any trade. If some of you were with Pro9 for a while, you may remember when we had the language of the cut through, and we found that to be a bit, or people were finding that to be confusing because they would think that even if I was already on the correct side of the histogram, the blue line had to dip back to the other side and then cut through. So if you're already on the correct side, the rule's qualified. And with this divergence reversal, again, our first clue is likely to be this red dot, and that could have appeared anywhere along this run, letting us know, giving us a heads up that there's a possible price reversal on the horizon, which is why it's our first clue for a divergence reversal. The second thing I always check is the super trend. If the super trend is not outside of its extreme zone, which is this yellow line here, or plus 60 or above, if it's not even close to that, I know that I'm likely not to see a qualified divergence reversal. And then I have my rules 1, 5, and 4 all wrapped up into one. If this number on the blue line is between 5 and 10, and this blue line is on the correct side of the histogram, that rule is qualified. So once I have the first 5 rules qualifying the trade, we do exercise a bit of caution since it is a counter trend trade, and we wait for 2 color bars to plot. So once this bar plots, we will wait for a retracement entry back to our turn bar entry price. In this case, it does look like it retraced far enough to get a retracement. Not always going to be the case, and that goes with any type of retracement entry. Typically, if you're just looking to retrace back to the bar before, which would be 4 ticks prior, that usually happens. But the 8-tick retracement can be a little more infrequent, so you may not be able to catch that more often. But we do like to exercise that bit of extra caution for the divergence reversal, because eventually we noticed that even though we had a fully qualified and very strong divergence reversal setup, that it could just turn into a continuation and still move. Sometimes the trend is so strong that the market just takes off, and we were already in a trade that would go against us. So we found this way is a bit more conservative, but it's really okay to be conservative when you're trying to go for a counter trend trade. And then our divergence reversal follows the same money management strategy as the single T and continuation, with an 8-tick profit target, 22-tick initial stop. And again with 3 contracts, as all our trades are. And the good thing about getting this retracement, if we do end up getting it, before this bar even closes, we'll have hit our profit target. And in this case, we would have hit our profit target, adjusted the stop on our runner to break even, and then been stopped out by this little wick here. And then we have a possible single T, but our blue line is not on the correct side of the histogram. So we know we're not looking for anything there. Because the blue line is so far, we're going to wait to see if it gets back to the correct side. But my EMAs are still in the correct order for a long. Super trend is still pretty bloated. My direction histogram came back inside its neutral zone, but still pretty strong. So I'm still pretty confident that we're going to be moving long. So I'll be looking for long trade setups. So blue line didn't quite get there. So we didn't have any qualified entries, and then we get another turn bar. And so seeing this lets me know that the market may be reversing, and it is. So we're not going to see any trade setups in here. We may see a dot trend. Even though none of our EMAs are in order, we'll almost always, I want to say around 95% of the time, see a dot trend over an area of the chart that would indicate that our EMAs are not in the correct order, because the dot trend is a bit weird where it doesn't include the 10, and so the 10 is almost always not in the correct order. Jennifer asks a great question. For divergence reversal, does the red dot indicate all the other rules are met? No. So very important. And I know it seems like there are a lot of rules the way these are all written, and I think they've been revised recently. But to wrap one of these up, or to wrap all three of these up, or to simplify this, and it's the way I think about it, I just think it's the most simple way. These rules are a little convoluted, where we're talking about our blue line and price bars moving in the opposite direction. Oh, that is an excellent suggestion, Jeff. I will definitely pass that on. We want to iron out these rules. Jeff's suggestion is to list the rules in the order of the panels. He said he rewrote them himself and found it really valuable. Yeah, so the way the blue line works is these numbers will start counting sequentially when the blue line is moving against the current trend. So when this bar, when you see your turn bar with your red dot, as that would be your entry bar, if we come down to the direction section and see the blue line, if it's on the correct side of the histogram, so we're looking for a short, so we need it below the purple line or below the histogram. This number needs to be between 5 and 10. And that covers rule 1, 4, and 5, all wrapped up. Yeah, so you would need the red dot, the number on the blue line being between 5 and 10, the blue line also being on the correct side of the histogram, and then our super trend being outside of its extreme zone. And the reason we wait for that is you can imagine the super trend as a giant slingshot or rubber band made of everyone's money being stretched to its limits and eventually snapping back. So, and another thing I want to point out about the histogram, and the reason we added this purple line in here, is because this is the value of the histogram that we're concerned about. I think a lot of people were getting caught up with this in-between space, and that's really just a visual representation of the value, so we just don't have two floating lines in here, making it even more confusing. So we're really concerned with the edge of the histogram, as that's what's actually displaying its value. So when we talk about the blue line being on above the histogram, a simple way to think of that is if the blue line is above the purple line, and if we're heading short, if the blue line is below the purple line. And so now the market's reversed and we don't really see anything developing because we need to wait for our EMAs to get in the correct order to look for a short trade. But also look where we are. We're close to the 200 as well as the low of the day. So when I see these two on top of each other, definitely worried that that will be a strong point of resistance or support, sorry. And I'm definitely not going to, I wouldn't enter a trade anyhow because I'm heading into the 200. So even though my direction is outside of its neutral zone, letting me, I could trade into the low of the day with some extra confidence. This right here is a very strong sign to me. I'm going to wait, even if I have a breakout where the entry is past the 200, but still before the low of the day. I'd still be a little wary just because we have 2 points of resistance here, or support. And definitely something to be a bit more cautious about. And as we can see, we bounced right off the 200. So almost came down and touched it directly, but we did have a bounce. So we might get another turn bar and move through it, but I'm going to wait to see that. See, and now we're locked in a channel. So we didn't really have any entries anyhow, but now we can see that looks like we're heading into a choppy market. If I see 3 turn bars in a row, I'm definitely going to put on my brakes and reassess the situation, because that's one of my first little alarms saying, hey, we might be heading into a choppy market situation. So definitely want to add in or add a bit more caution when doing this. So, and then we look for our signs of a choppy market, which are, we need multiple turn bars very close together. So 3 in a row it's definitely a start to let us know we're heading there. So if I see, maybe 1 color bar and a few more turn bars, as I'm already wary about entering into new trades, and because also look where the price is. We're locked in this channel between the 200 and these other EMAs. So we can see the price get locked in here for quite a while before it breaks out. And real quick, Joe D asks, so was that earlier divergence qualified and playable? It appears so. I would just have to double check with market replay or a second chart just to verify, but it does look like it did retrace far enough. So, but depending on how fast the market moved, it does look like there was some time to retrace in there. So you had a couple minutes. So I have my multiple turn bars in a row. A few of my EMAs are roped together. Typically I'd like to see some more, but 2 EMAs roped together and then being locked in this channel is also a strong sign. And then my blue line also not heading back to extremes. So I'm definitely wary about entering into new trades at this point. So I want to wait and see what the market does. So I don't want to just enter a trade just because, even though it may be qualified, this is a time where we can use the indicators to give us a little more information, and it's telling us, you know what, even if we see qualified trades, it may not be the most ideal time because we're stuck in a channel, we're right on top of support, we're hitting some resistance here. So it doesn't look like even if we enter a trade, we're going to hit our profit target because we've just been bouncing up and down. And we don't have any qualified entries anyhow, but even if we see this type of configuration where we do have qualified trades, it's something to be very aware of. So, and then it looks like we're just going to begin trending long, but then we come back down again. So it seems like we're definitely stuck in here and having trouble breaking out. So now we do have, nope, our blue line is not on the correct side of the histogram. So we couldn't enter this trade because the blue line didn't reach the correct side of the histogram until bar 3, and that's a late entry. We can only enter our single T's or continuations on the first or the turn bar or up to the first color bar. So any qualifying trade on a bar later than that, unless it's a momentum, will not be a qualified trade. And so now it finally looks like we're going to break out through the 200. So and this breakout could be taken. We are past the 200. I myself would probably be a little cautious, even though it looks like this was just a very brief area of chop that we didn't have any qualified trades in anyhow. And it was just a quick head fake before we start trending short. Still, the 200 being right above the low of the day kind of worries me. So, but after this point, I do see that my blue line has come back and forth to its extreme lines. And that's really what we want to see to let us know that we're no longer in chop. That's probably one of the strongest signs. But also another good strategy is to just watch a trade succeed without you. And that'll let us know that we've cleared the choppy market conditions and are now probably heading back to some decent trends or some longer cycles that we can catch some winning trades in. So and this one did go quite a way. So if we did enter this breakout, would have been quite profitable. Well, we would have hit our profit target and grabbed a couple extra ticks with the runner. So, but again, you know, depending on, anytime I see the price get locked into this channel, it definitely worries me because we never know when we're going to break out of that or when we're going to move to the 200. So we do have a green dot, but not looking like a divergence reversal. Our super trend is not outside of its neutral zone, or its extreme zone, sorry. And our blue line is not between 5 and 10, or the number on the blue line. We can see it did start counting sequentially, but then it ticked back to a 1 and reset. So when it resets, not qualified trade. And again, hitting this resistance point. Still no qualified trades because our blue line is not on the correct side of the histogram. Again, not quite there. And this one does get there. But we want to make sure we have enough space before hitting the low of the day to hit our profit target. Because our direction histogram is not outside of the neutral zone. And that's our requirement for being able to take a trade heading into the low of the day, meaning that we don't have enough space to hit our profit target before hitting the low of the day. So we definitely want to see the direction histogram be outside of its neutral zone in those cases. So once we see this momentum arrow, and this is a good example of when do we know that the blue line is close enough that we can enter the trade ahead of time, even though it isn't already confirmed. And when it's this close, I'm 98% confident. There are very, very rare times where if we see a long wick on that bar that doesn't quite reverse into a turn bar, that price action will pull the blue line up a bit, so it may not cross or it may be right on the edge, but I would say 98% of the time when it's this close, especially this close, it's going to cross if the next bar turns into or plots as a color bar or in the direction of the trend we're looking for. So at this point, even though my blue line isn't on the correct side, I'm extremely confident that it's going to get there. So I would enter my red DPI ahead of time. And again, this goes back to what we were discussing yesterday by anticipating these trade setups. Even though everything's not 100% lined up, I'm extremely confident that it will be if my entry price is reached. And so if the trade is going to be qualified when my entry price is reached, why not put that in ahead of time? So I can be the first one out of the gate. I can get a head start on everyone. Obviously not everyone, but a good majority of traders. We can have our order in before the rest of them. All right, so at this point, I would see that my red DPI is 5062.75. So I'd go ahead and put in my stop limit order and my dome, or if you like chart trader, you can do that as well. I'm not really familiar with chart trader. I've always used the dome and I'm just familiar and comfortable with that. But either way, the result is the same. We put in a stop limit order so that once that price is reached, our order gets filled, and then we're in the trade. And that happens at the same moment that the trade becomes fully qualified. Because when this bar closes, the blue line plots on the correct side of the histogram, and the 3 EMAs I'm worried about are in the correct order. And again, with our 15-tick stop, 6-tick profit target, hit our profit target before we get to the low of the day. So then after that, I've already hit my profit target, and my stop is for the runner is at break even. So even if I bounce off the low of the day, I've already got my profit target. So this is why we want to have enough space before heading into the low of the day. No, that's a great. Jennifer points out that was a single T, but it really shouldn't have been. The red background shouldn't have plotted here until this bar, unless I'm missing something. Or maybe I somehow reverted back to a previous version and didn't realize that. I have been having to reinstall NinjaTrader a couple times. Jeff asked if I like the direction ribbon versus the histogram. He likes the ribbon because all you need to see is the red or green. Yeah, I like the histogram and the direction section just because that's when I first learned this. That's what I learned with, and I'm just kind of comfortable with that. And I feel like I can anticipate some of the entries better that way. It can take a little bit of extra time, but I do agree that the ribbon does make it a lot quicker to verify if we're in a qualified trade. And to answer Jennifer's question, I was referring to this momentum here, as I'm actually not sure why this background plotted red here. The only thing I can think of is if I have somehow reverted to a previous version. I do install quite a bit of different Pro9s to test on here, so could be the case. I'm not sure. I'll have to dig into that after the class. But anyhow, and then we do continue moving through the low of the day, and then again after the 4th bar, and this is really the momentum trade is really the only one where we have to count the bars before we realize when we can adjust to the high of the previous bar. We know if we enter on the turn bar, it'll be at the close of bar 5, we can begin trailing at the high of the previous bar. And if we enter on the first color bar, we're just going to push that back 1 bar because we got in 1 bar later. So we're going to manage everything the same except one bar later. So that would be at the close of bar 6. So with the momentums or the breakout, you just have to count how many bars, and you can just add 4 to whatever number of the bar you entered on. So at the close of bar 7, we'll adjust to the high of this bar and do get stopped out, but we were able to grab a couple extra ticks. I believe that would be 5 ticks with that runner. Oh no, in this case it would only be 1 because that is the 4th bar. I got ahead of myself there. And then not a divergence reversal setup, as we're not really looking, don't see any divergence. And then looks like we're just going to reverse, move through. Not a dot trend here either, as the 200 is between our 20 and 50. So if we look at our rules for the dot trend short, we need our red dot, the 20 below the 50, below the 200. So in this case, that rule is not met because our 200 is right between those two EMAs. So not a qualified trade there either. And then again, we have this a momentum entry here. Now we may have needed to wait for this bar to close and attempt a retracement entry. And that's not because of the blue line, it's because of these EMAs. If we look right here, our 10 EMA is still above the 20. And they're very close, but I can't be sure that they're going to move and it's going to cross the 20. But in this case, it does just barely, even though they look like they're right on top of each other. The background color and all of these indicators really have a much more precise value than is indicated in the data box. Just like with the blue line, if we look at our data box toward the bottom where it says 10, 20, 50, 200, those are the values of our EMAs at this point in time. So even though the 10 and the 20 display the same value, there are more decimal places accounted for to give a more precise location in regards to each other. And the background color considers that. So even though we may check the data box and say, hey, it looks like it's the same, it's actually not. And again, another momentum trade that did hit profit target. Looks like the runner would be stopped out, and then we have another momentum entry. And we want to make sure we have enough space before we run into the low of the day. We're getting close, but I could tell it looks like we have more than 2 bars space before we hit the low of the day. So you may want to double check, and our low is at 50.48. And our entry would be 50.75. So that's 11 ticks of space. So we do have enough room to enter this momentum entry. And again, this one hits profit target, and we start trailing at the high of the previous bar at the close of bar 11, 4 bars from our entry. Adjust it to the high of the next bar, and then now we can widen to the DPI again. We're going to use the green DPI, but again we get stopped out. And so now, just as I pointed out, one of the downsides of trailing at the high or low of the previous bar, this is probably the downside of widening to the DPI. It's when we get to the point where we can widen to the DPI, the next bar is a turn bar. So we had already adjusted our stop to the trailing at the high of the previous bar, so we had secured some more profit, or I'd say more potential profit. So we have to weigh that into consideration also, because this is going to happen just like getting stopped out and entering a momentum trade right before the turn bar would happen as well. But when I weigh the options, I feel that it's better to just give up some ticks of potential profit than run the risk of possibly having that momentum before the turn bar. So, and a way I like to uh, look at this as well that helps me to deal with it so I don't get too involved playing these mental games of, this much profit, but all those kind of games while we're in a trade, is that the contract is still in, so it's not my money yet, right? It's still in the market. I haven't extracted with it. My goal is to uh, maximize my potential profit. So I think in the long run, widening to the DPI accomplishes that. And both those strategies may be very close in overall long-term profit. So, but that's about the only downside I see to widening to the DPI. And I think it works out to giving up like 5 or 6 ticks if you would have, rather than if you would have been trailing at the high of the previous bar. And again, an example, so I see my green dot, and I would have seen it somewhere around here, not sure where, but I glance down at my super trend, and I see it's not outside of its extreme zone, so I'm not going to worry about a divergence reversal setup, because it's not going to be qualified. Unless I see, unless it goes on for a couple more bars, and the direction histogram, or the super trend, I'm sorry, gets outside of its extreme zone. So in this case, it's not, and the blue line didn't cross to the correct side either. But this is why I check the histogram after I see a dot, because it can let me quickly disqualify the trade and say, you know what, there's no trade there. And then I don't have to waste any more mental energy. I can just either scan another chart, wait for the next trade setup, and then looks like we get to the end of that market. So let's pop up another one. So CL was kind of slow today, not a lot going on in CL. Just trending long from the early morning session. No news in the CL. So opening bell was right here. And then we didn't really have any entry points until this momentum entry here. So that one would have hit profit target, maybe grabbed a tick with the runner. But we see this, we have a turn bar down, and then we may be set up for a continuation long because our rules are still qualified. All right, Jeff. Yeah, go ahead and do that. Just to clarify, that was the NQ rather than the NG. So I think that may have been a typo, but just verify. So if you're looking at the NG, that's not really a market we look at. But you guys always feel free to send us screenshots if you think your charts aren't looking right. Send a screenshot to support@academydaytrading.com, and we'll go ahead and take a look at that for you. We do want to make sure there's nothing going on with the indicators. Sometimes installing new versions, they don't overwrite completely in NinjaTrader, so NinjaTrader will kind of keep a remnant of an old version indicator in its files that may need to be removed, and it keeps trying to reference that. But that indicator's been updated, so that version it's looking for doesn't exist any longer. So that can cause charts to get out of whack sometimes. So if you ever feel that's the case, you can shoot an email to us. We do try to get back to you as soon as possible. We've had a huge influx of support recently, so we're trying to get to everyone. So if you have sent an email and haven't heard an answer back, we are working as quickly as we can to get all caught up. And we do appreciate your guys' patience with that. So. All right. That happens sometimes, Jeff. I get myself mixed up quite often. Sometimes looking at too many charts, you kind of, I'll forget which one's which. And there we go, looking for my continuation rules. And so again, even from the opening bell, I can establish that, hey, I'm already set up for a long trade. So as soon as I see this arrow, I could enter into this momentum. And then again here, I'm still set up for a long trade. Nothing's really changed. I had a turn bar, but that's not enough to tell me that the market's going to totally reverse. So at this point, I would like to see confirmation from my blue line, as it's just a little too far for me to be completely sure that it's going to cross to the histogram. Now, I've seen these charts a lot. I feel like it will, but I don't want to have those who are starting out take on any extra risk. So until you get some more screen time and experience and kind of get a feel for the blue line, I do recommend, and I follow this rule as well, if I'm not sure, wait to confirm. Because the worst that's going to happen is either we're going to wait for that bar to close and confirm that the trade was qualified and attempt a retracement entry. And the worst that can happen is we miss the retracement on the turn bar and we can get it on the first color bar. Or the blue line's not going to cross to the correct side and we'll get in on the first color bar anyway if it's this close. Or the blue line just doesn't make it and we're not in an unqualified trade. So we really want to try to avoid getting into trades ahead of time where we're not 100% sure they're going to be qualified when that DPI price is hit. Because we don't want to run in there guns blazing, hopping in all these trades ahead of time, just assuming that it's going to work out. And then we may find ourselves in unqualified trade situations. Now, while some of those may go your direction, eventually one will come back and bite you unnecessarily. And we definitely want to try to avoid unnecessary losses. And I saw Steve had a question about a screenshot. How do you take a screenshot? So if you have Windows 10, I believe in older versions of Windows also, you can go to the, where you search for your programs. There's a search bar. It's called Snipping Tool. I'll go ahead and show you what the icon looks like here. So you'll see this little scissors and this red circle. That's the snipping tool. And you just click New, and that will, and then you'll drag a box where you want the screenshot to be taken. And then you just save it, and you can attach it to the email later. So really the easiest way, there are some few free programs. One is called Jing, J-I-N-G. You can just type in Jing into Google, and it should come up and download it for you, and that's another screen capture app. Oh, and Joe D mentions that if you right-click on the chart, there is an image function. Oh, I had actually never used that before. I just am so used to taking screenshots with the snipping tool. But I imagine if you image and print, or you can save as, I believe those will both accomplish the same thing. Learn something new every day. Thanks, Joe. That's pretty helpful. All right. So back to our anticipating the continuation. Again, I'm going to wait for to confirm this blue line, just because I want to be extra sure. So in this case, the market went back down. That's okay. Even if we were a bit of a cowboy and had put our order in ahead of time, it wouldn't have been filled in that case. But don't want to instill that bad habit into anyone unless you are more of a cowboy trader, like to be a little more risky, totally up to you. So I can't stop you, but I can just tell you what I've seen from looking at these charts for a while. So again, we were set up, now here we are set up for a possible continuation, but we had the same situation where a blue line's too far. Now it's definitely too far for me to be sure that it's going to cross. So I'm going to wait for my turn bar to plot. Now I am going to head into the high of the day within the next bar or so, but my direction histogram is outside of its neutral zone. So I have that extra confidence that I'll move through the high of the day and hit my profit target at least. So 1 second, guys. All right. So I do want to wait. Now that it's this close, I kind of feel like it will cross, but I'm going to wait anyway. I just want to be a bit cautious today. So I do see that it did cross. So in this case, it is even acceptable to retrace back to the turn bar entry price if possible. If not, the first color bar retracement as well. And then since this is a continuation, 3 contracts again, 8-tick profit target, and 22-tick stop. And once we see our first color bar plot, that lets us know the trade has moved 4 ticks in our favor. And we'll adjust our stop from 22 to 18. So we want to adjust our stop up a bit, kind of mitigate some of that risk in case the trade moves against us. And we only need 4 more ticks to our profit target. In this case, we do hit our profit target. Would adjust our stop to the stop on our runner to break even after selling our first 2 contracts. And depending how you're managing these trades, if you're doing it manually, ideally you want to adjust the stop on all 3 of your contracts to break even before selling the 2 at your profit target, if there's enough time. If it's just quicker to sell them, go for it. But we do that just to totally eliminate risk in case there's a quick little price whipsaw that heads back and we get a head fake or something. You know, sometimes we have to take a scratch trade, but you know, if we're not using an ATM and handling everything manually, that's better than taking a loss. So, and then we adjust the stop on our runner to break even. And much like our other trades, so this time we didn't get to adjust to the low of the previous bar, but we did get our 6 ticks, or 8-tick profit target for 2 contracts. And then nothing much cooking in the CL. It's pretty slow today. So, all right, everyone, we are down to the last 30 minutes of the class today. So if you guys have any questions, things you want clarified, feel free to holler at me before the class ends so we can get all that. Want to make sure everyone's clear on as much as possible heading into the weekend. We just don't want to leave any unanswered questions. Yeah, there will likely be more trading classes. We're trying to do some restructuring of how we do all of our training and stuff. So we're working all that out at the moment, but we'll be doing more of these trainings. So, because our goal with these is eventually, you know, have you guys come back maybe 2 or 3 times if you need to, but we want to try to design them so that we can get everyone up to speed as quickly as possible. And then there's always the recordings as well if you want to go back and review. So, because our goal is to get you guys trading using the system. Now, Jeff mentions it is helpful walking through the charts and your commentary on what you're thinking. Excellent. Yeah, I was trying to get this queued up on Market Replay, but we just had some moving offices, internet issues. The internet company said they were going to be here, and then said they actually came by when we were here, and that wasn't the case. So anyhow, hopefully in the future, I want to actually queue up a market replay so we can kind of scan a few different markets, simulating as the day would have went. So maybe of the previous day or some day earlier that week. Uh, so as that'll be even a better way to simulate actually trading in the market, and maybe even put some dumb work in there. So I know that's one of the things we try to keep a bit separate on is the platform side of it, because we can't really bring on a lot of NinjaTrader support because we just don't have the manpower to do that. But we do want to provide some helpful information to help get you guys set up so you can use the NinjaTrader platform. So, all right, so we covered our NQ. As far as the recordings go, let's see. So if you are a member of Academy Day Trading, you can log into the members area, resources, under the resources tab once you're logged in, and training room Q&A sessions. So these will be all the previous recordings. So the last week or so aren't up yet. We just had a lot going on. I haven't had a chance to upload them, so hopefully we'll be able to get the last week or so updated before the end of the day. So shooting for that. Not sure how that will work out. Raymond mentions the NQ momentum bars. I didn't have as many as your chart. Yeah, that may be the case if you've refreshed your chart at all. And there's always data feed differences between tons of charts. So we can even have two charts in the same room, or two computers in the same room hooked up to the same data feed, and they'll still display charts, different charts, slight differences, just due to the way the data feed servers are set up. The live and historical feeds are actually two different feeds. So while I may be getting a perfect live and historical data feed, you may experience a hiccup which throws a tick of difference, and that could be the difference between displaying an arrow or not. So nothing to be super concerned about. And Raymond says CL was the same. All right, may have to take a look at that for you if you're seeing a lot of different, or you're not seeing as many arrows. But keep in mind, a lot of these arrows aren't qualified trades anyhow. So the arrow really tells us there's a possible momentum, as we have these downward arrows over what end up being bars that are trending long. So these are, unfortunately, we just can't filter them out due to the way we have to plot the arrow in real time. So when the arrow is triggered, it doesn't know what this bar is going to do. So you can refresh your screen and get rid of those, but I wouldn't be too alarmed if we're not seeing these arrows. That's totally fine. But if you're missing arrows on an actually qualified momentum trade, definitely something we'll need to check out for you. And another thing about data feed discrepancies is, when in doubt, just trade your chart. You want to trade the information on your chart. And I tend to hear people get kind of worried when they see some data differences between charts. They may be comparing with a friend who also trades, and it's just something we have to deal with. We just can't do anything about it just because the way the data feed servers update. So part of a byproduct of the technology. Give me 1 second, guys. All right, so let's run through our good friend the TF. So immediately off the TF, before we even get started, how we can kind of glean clues from the early morning, kind of give us an idea what may happen. Sometimes you'll see stuff like this in the early morning before the market opens, and then the market takes off. But this can kind of clue us in. 200 was coming down. We were on a long downward trend yesterday. So our 200's right here. We are starting to trend long, but we're getting in these really short little stair-step patterns. I see my blue line comes to its extreme on the top side and then jumps back down to the zero line. And that seems to be a common theme. But let's walk through and see what we get. So not really anything showing up yet, as we were just trending long, but now we're heading short again. So we need to wait to see our EMAs reverse, or we need to wait to see the price heading long again. And again, it looks like we're going to be in this channel unless we're going to move totally out of beyond the 200, which looks like we do. So eventually the 200 is going to get below all these other EMAs. It does take a little bit of time because the EMA, the 200 is the slowest moving. EMA. So now we're heading into the high of the day. But if we look at my direction histogram, it's not outside of its neutral zone, so I won't be able to enter a breakout. So if we look at our rules for a breakout, my neutral zone needs to be at plus or minus 50. So this is, so not only do I like to find ways to qualify trades quicker, I like to find ways to disqualify trades. And I feel that checking the rules in a certain order does help me do that. So the first thing that clues me in that I'm doing a break or looking for a breakout is, am I heading into the high of the day, high or low of the day? In this case I am. It's going to be a couple bars, but looks like I'll get there. But next I check my direction histogram, and it's really weak. So it's not really where it needs to be. I don't think it's going to get where it's going to go, where it needs to go for this trade to qualify before the price breaks through the high of the day. So I'm probably not even, I mean, I'm going to watch it, but I don't really have my hopes up that it's going to go anywhere. So by the time this price breaks through the high of the day, my direction histogram is not there. So nothing doing. And here, so after we come up, we get a short turn bar. We have our upward turn bar. And all our rules are like already qualified for a long trade, for a continuation. So let me get back on my train of thought real quick. All right. So at this point, I can assess ahead of time. I have my EMAs in the correct order. My super trend is outside of its neutral zone. My blue line is already on the correct side. Now, since this reversed from the high of the day, this is going to be the new high. So I'm going to be heading into this high that was just established. So I want to make sure my direction histogram is outside of its neutral zone, which is at plus 51. You can also check these little tags on the y-axis, let us know the values. So at this point, I could even enter my green DPI, 1353. Halfway to our profit target, adjust our stop from 22 ticks to 18. After the close of this bar, we do hit our profit target. Adjust the stop on our runner to break even. Adjust to the low of the previous bar or most recently completed bar after the close of bar 5, since we entered on the turn bar. Adjust it to the new low of the previous bar. And then here, widen to the DPI. Again, optional. You can continue trailing at the low of the previous bar if you decide to. And keep widening to the DPI or trailing to the new higher low as we continue. And then we have a divergence reversal setup. So again, we'll do this without the rules. So we have our red dot, which is our first clue. Our super trend is outside of its extreme zone. We're at far above plus 60. Our blue line has been moving in the opposite direction of the price bars. And when the blue line gets to the correct side of the histogram, this number is between 5 and 10. So now I have my all my rules qualified for the divergence reversal, and now I want to wait for my two color bars to plot. I have my first color bar and my second one. So then we will attempt a retracement during the painting of bar 4, which may or may not. So it does look like it gets up just enough to allow for a retracement. And again, so with a divergence reversal, since we enter on a retracement of the turn bar entry price and the close of bar 3, would be our profit target. So before this bar even closes, we'll hit our profit target, adjust our stop on the runner to break even after selling our first two contracts. And then at the close of the next bar, we'll still start trailing at the high of the previous bar, or most recently completed bar. Or just use these gold numbers as your guide. And then we get wicked out, but we did hit profit target, grabbed an extra tick. All right, double wick situation, and then we start trending short. And then now, after I see this, I mean, my EMAs are getting kind of roped together. Super trend very weak. Direction histogram heading to its zero line. And more importantly, my blue line is bouncing around inside this neutral zone. And that's not what I want to see. I want to see it moving back and forth to its extremes fairly regularly. So once this happens, I only have a couple turn bars, but I'm definitely considering that I'm in a choppy market situation. So do have a qualified entry here. Now, I kind of feel like I'm heading into a choppy market situation. I may not be 100% sure because I don't have too many turn bars in a row. I am a little wary though. But let's say we'll enter this single T, or this would be a continuation, I'm sorry. We'll enter this single continuation using the green DPI, 1353.8. And again with our three contracts, looking for the 8-tick profit target. So I would get halfway to my profit target. Don't have to worry about this tail. It doesn't look like it came down far enough to hit our 22-tick stop. And then once this bar closes, we would adjust our stop to 18 ticks. And then we get stopped out. So at this point, I'm definitely considering that I'm in a choppy market situation. And I'm going to put it on pause. So now we're starting to see more turn bars, right? And we get these really short cycles. So in this case, I'm definitely not going to enter into any new trades in the TF at this point, as I have all my signs of a choppy market. So even if I see a qualified trade, as this one is, would have got stopped out. So more than half of the bars, about 50% of these bars, are turn bars. When you see that, you see this blue line not quite reaching its extremes, a couple EMAs right on top of each other, and I mean, typically I would like to see the super trend and direction closer to the 0 line, but this is definitely enough information to let me know to sit out until I see a return to normal trends. And I want to be really careful about hopping into a trade here, because what might happen is, yeah, we can enter a trade, reach our profit target, but we may not be out of the choppy market. So to me, it's not worth the risk of going for these trades in a choppy market situation, because we're going to end up entering trades that go against us when we know that our indicators are telling us that there's a lot of indecision in the market. It's just bouncing up and down in this range. So even though once maybe a couple of these trades may succeed, to me it is just not worth the risk until I see clear evidence that I'm outside or out of this choppy market. And another turn bar. So even though this is qualified here, so I have my EMAs in the correct order, barely. I have my blue line on the correct side of the histogram. My super trend is barely outside of its neutral zone. It is a qualified trade. But again, just look at this. I mean, if we look at this, do you really have the confidence that we're going to hit our profit target? I sure don't. So I would just wait this out because I want to see a return to normal trends. And again, would have got stopped out. Even though our blue line came back to this extreme, but we're still not coming back the other way. We want to kind of see this move back and forth consistently. If we get even this bouncing up and down, still not enough for me. All right, so now now we're back in this range. So we never really got to where we need to get into these trades. So even though this is a winning one, I'm still not seeing evidence that we're back to a normal trend. So this would have been one losing trade, two losing trades, three losing trades, and one winning one. But these could have been avoided. Now, we may have taken this initial one, which is sometimes what has to happen before we fully recognize we're in a choppy market situation. But if we can avoid the rest of them, I mean, it's definitely worth it. We're going to take losing trades in trading. It's just going to happen. So, an excellent question. Jennifer asks if the recoil trader has any way to detect choppy market. Yeah, it does have protections in there to avoid choppy market situations. So it checks for all kinds of stuff, number of turn bars close together, tries to follow these same rules. So and then finally, it looks like we're returning to a short trend and a momentum entry here. But again, I mean, get stopped out. Could just be a rough day for the TF. So even though we see this, which is why I think it's a good idea to wait for a trade to succeed without us, as well as the blue line coming back to its extremes. So this just may be the one that, even though we could avoid these, we still catch this one. So some days in the markets are definitely going to be choppier than others. And if you see a market and it seems too choppy, put it on the back burner for that day. Just check out another market, which is why I also like to have options. I think it's much better to have options. I don't see the reason to being married to a particular market because, in all honesty, I don't really care what I'm trading. It doesn't really matter if it's oil or gold or some of these equities markets. It doesn't matter to me. All that I care is that I see these patterns confirm these qualified trades and I enter them at a higher probability than I catch losing trades. So to me, I look at it as a puzzle or a game or something like that, where once all of these things line up, I go for it. Now, there are additional tools we can use, like recognizing a choppy market, where just because we see a qualifying trade, it's likely not the best time to take a trade. We can glean that information from these indicators. So, all right, before I jump into anything else heavy, it looks like we are down to the last couple minutes of class. So I'll use these last couple minutes for any last minute questions you guys may have before we sign off for the day and get to enjoy the end of the day and head into our weekend. So last minute questions, anything anyone needs a little clarification on? All right, I'll take that as me being an excellent teacher. All right, thank you guys for joining me. I hope you leave the class learning a little more than you did when you walked in or when you logged in. And hopefully we can continue to get you on the fast track to trading with Pro9Trader, get you up to speed so you can make the best trading decisions and enter into the most highly qualified trades possible and increase your profitability, because that's our goal here. So you guys are very welcome. Emails will likely go out for the next class, Jennifer. So those usually go out starting Monday or Tuesday, I believe. So everyone, enjoy the rest of your day. Enjoy the rest of your weekend. I hope it's a relaxing, laid-back weekend for everyone. And until next time, happy trading.